Hello, everybody. I want to see who's there. Actually, there's quite a few people here. So, can you see and hear me all?
Yep.
And I think, and
it's okay. I can hear, can see the screen. Very nice.
And then we have Marcel Parker and Nate Ventress. And I think I saw someone else just now, but I think that's it. Okay. So basically, it's a little bit of a repeat from last time. So because I got a lot of people, new people registering for this event. And I was thinking I'll do the same one again or a similar one. So let's get started. And, and hopefully you can see a few things that you haven't seen. Actually, I came up with something that you probably haven't seen. So the first thing I want to do is show you how drag and drop actually works. And it's a really powerful feature that allows you not to program. And so, yeah, someone said he can hear me loud and clear. That's good. So it allows you to create strategies without programming, and not only just simple strategies, but you can optimize them. You can do a position priority, which we actually call weighted transactions, where you can basically define which position gets a priority, things like this. So let's get started with that great feature, which is actually here under this one. You can say create a new building block strategy. It opens up, and here you have this buy at market, but it could be anything. Buy at limit or stop. It could be short at limit or stop, short at market, or you need right here. So that's the first great tool that you can basically drag and drop things over. Now, what can you drag and drop over? Anything that is here. An indicator compares to an indicator. And I want to show you the indicator comparing to an indicator, and one of the most used tool is a standard moving average. So basically you say if the close is greater than a 20-day moving average, that's when you want to buy at market. So if the close is above the 200-day moving average, that's when you want to buy. And let's take a simple exit. We take a profit target exit so that we don't have to do this as well. So I basically delete, no sell at market, no sell at profit target. That's basically what it does. As soon as we have 10%, and this is totally random, that's when you basically want to exit, no stop loss. Or shall we have a stop loss? Let's take a sell at stop loss as well. So that's another one, and we make this a little bit higher because market it drops usually more than it goes up, or faster than it goes up. It doesn't drop more, it goes up usually. So that's a simple strategy, and you can then use this strategy and apply it to a single symbol, as you can do with many softwares, on daily basis, on weekly, monthly, quarterly, 1 minute, whatever. You can use 3 minutes if you want to. I'm not going down that road. And you can define, so I use daily, and you can then define how many years you want to backtest. So if that's just a SPY, for example, you can then define 20 years of SPY. That's what you want to do. You want to have a starting capital of, let's say, we change that to 10,000.
And Volker, with the years, you don't need to only specify years. There's many different options you can choose from there.
Yeah, absolutely. You can say all data, which I probably should do because I'm not sure whether the SPY even has 20 years. There's someone else coming in.
And what is that little button next to the drop down most recent years?
Yeah, that's a cool feature. I know you wanted to hint that. I can basically define a range of years and then say, let's say I do my own date range, and I say from, I'll make it something else, 2012 until 2022. And then I can save it and reuse it for, let's say, if you want to backtest in a drawdown phase, in that drawdown phase, you want to see how did I do in the drawdown phase and how did I do in a bull market or a bear market and a bull market. And that's exactly what it does. You can basically say bull market here, bull, and then you call it bull, and it becomes one of your ranges that you can use. So you don't have to type it all the time. You can basically say, oh, I test on the bull market and I test on the bear market, or whatever you feel like doing. So that is something you can do. So automatically it goes, if I go all data, it takes all data. I can say most recent 10 years, or I can use this one, which I called bull. So, but I want to test it on all data because it's only one symbol. So guys, if you have questions in between, you just unmute yourself and tell me what you want to ask. And
okay, a little question. Can you explain why cover instead of sell at profit? I could not understand better in the strategy. I think that put cover at, and I thought that would be sell at in the strategy.
Say that again.
You put cover at profit. I thought that would be sell at profit. I would like to know the difference between cover at and sell at profit.
Oh yeah, you're right. Yeah, sell at profit target, not cover at profit target. Yeah, very good.
Okay.
Next time you do it.
That's what's known as user error.
Yeah, that's a very typical thing that happens for users, but and even professionals. So now we have the sell at stop loss 20% and sell at profit target 10%. So whatever hits first will be executed. And
Robson, I think we're going to have you start hosting these sessions.
Yeah.
One day, who knows? One day.
For Brazilian customers then. Where are we now? You get me all mixed up here. We base our position size, since we said 100%, we take a little bit of a margin factor. That's too much. Let's take just 1.1. And we use 100%. There's another one coming in. 1 second. I'm not sure whether those guys come in, but they can make it. Yeah, there's a Mark and FLX in here. Great. So we're in the middle of creating a strategy here by just doing drag and drop, which is really easy. We're running it on the SPY for all data that we have. And we use a profit target and a stop loss. We created a simple strategy because I wanted to show you something. I go to the backtest results. I run that backtest, and it's picking up the data. And here's the result. We have an equity curve, and we have the metrics. Let me quickly see, what did I use as? Yeah, I used the SPY for the as the benchmark. It's actually quite important to use it's not important to use a benchmark. To have a benchmark is actually quite good. So if we say the 20-day moving average on the SPY, which is basically, it's just one symbol, is, as you can see on the green line down here, not as good as buying and holding the SPY, just like that. So we should have a number of positions. Yeah, we have a lot of positions.
So it looked like, I mean, what it's doing is it's keeping buying and selling and closing at that profit target, basically, and then just buying again, like right after the next bar, right?
Oh yeah, because I was doing close is greater. You're right.
Yeah.
I should actually use the close crosses above the moving average.
Yeah, I wasn't sure what you were trying to go for, but yeah, if you want to only trigger the trade on the crossover, then you should use the indicator crosses indicator.
Yeah, the indicator crosses indicator, that is what I wanted to go for, and not is greater than. So another user error. It doesn't.
You deleted your whole buy.
Yeah, I deleted the buy. Yeah. I go buy at market and I go crosses indicator, and a close crosses over the standard moving average. So we leave everything as it is, except that we do the cross, so it doesn't go in anymore. That's a very typical user error mistake, and I do that a lot of times, as you can see. So I do the back test, and I get the back test results from 1993, and here we go. You see, now the equity curve is different. There's a lot of times where it is actually out of the market, and the green is always the equity curve, and the dark is the buy and hold, which is represented by the SPY itself. So what we can see now is we have 43 trades using a simple strategy, and have 34 profitable, which actually, but we have a drawdown of 65%, which is just even higher than if you would have just buy and hold the SPY. Is this strategy any good? Not really, because the profit is 30,000, the benchmark is 90,000, annual percent return is roughly 5%, in the benchmark it's 8.3%. So a moving average strategy, even on the SPY with a great bull market in the last 10 or 15 years, isn't that good. I can actually, that's where I wanted to go to. And if you have questions, again, go and ask. What I wanted to do is I wanted to optimize this strategy. I wanted to say optimize it, and I can just simply optimize it by going here. We say start at 10, end at 100 here, and use 10. So it goes from 10, 20, 30, 40, 50, 60. I can quickly optimize it by going to the optimization tab. I did, again, close, yeah, it's here. Optimization tab. And I can do a standard optimization, which is just simply running it, which I do because that's hopefully real quick. So it's running now an optimization between, as I said, 10 days, 20 days, 30 days. For this nearly 30 years and 10 runs, it takes another 14 seconds.
So here's an interesting point. You're using the optimization method exhaustive non-parallel, which means that each run will happen one by one. So it's not going to take advantage of your multiple CPU cores.
Yeah, that was just now here, but it's gone. Here, you have different ways to do it: exhaustive, non-parallel.
Why don't you try exhaustive, which will use parallel processing? Let's see if that's any faster.
Okay, this one?
Yeah. So what it's actually doing now is running kind of all of them at once. So it kind of is a little bit laggy in the beginning, but then all of the runs get finished at the same time, basically. So it wasn't much of a difference on this one because there's only 10 runs. But if you have optimizations that have a lot of permutations, then using the exhaustive parallel processing will definitely be much faster.
And what you can see is the runs are, come in different periods. So, but anyway, what I wanted to, here we can see the annual percent return. So 10 would have been actually the best result. And where you would have nearly 7% annual percent return. Interesting, all of them are pretty, decent, but none of them actually beats buy and hold, which has 8.3%. So what I wanted to do, and I'm going to change this now to weekly, because then it's a little bit faster. I wanted to show you the optimization that I think is the best, because usually people tell you, take in sample and out of sample. That's what they tell you. Take 10 years of in sample and 10 years of out of sample. Since I've been doing that for 30 years, I already know that that is not really good. So what WealthLab has a walk forward optimization, which means it takes a certain period, optimizes it, and applies it to another period, the optimized result. And then you can basically either move the window in one direction, or you can extend the window. I'm going to show you how that is called, the walk forward optimization. You can use an expanding window or a sliding window. Expanding window or sliding window. Like here, I have just, is that clear for you guys? Are you familiar with walk forward optimization?
Yeah, I mean, basically a walk forward optimization kind of divides the historical period into different chunks. And so it runs an optimization on the first chunk, determines what the best parameter values were, and then applies those parameter values to the next chunk of data. So it's kind of like not cheating in a way, as it were just a normal optimization. You would just run it across the whole period and see what the best parameter values were. Using walk forward, you can kind of go step by step, applying those parameter values on out of sample data.
So what I have here now is I actually used 4 intervals, and we basically optimize on 10 years, apply it to roughly 5 years. Then we optimize on 15 years, apply it to the next 5 years, and so on. So this is, in my opinion, the true optimization, and that shows us whether a system is good or good enough. We've done that last time, I think, with rate of change, if I'm not mistaken, but I'll do it with the moving average now. And that is what I wanted to show you. So we do the walk forward, we use an expanding window. I do the non-parallel, because I'm more familiar with this one. And it's running it now. So what we can see in a couple of minutes or seconds is the result. Wow, what is that remaining 5 minutes? 3:51 was faster last time. Maybe I should stop this. Gian, what do you think? Not sure why it takes so long. I stop it. And I think we get some results anyway, just 2. But even though I changed it, I think to weekly, still running here. So, Dion, you know what it's doing, right?
I'm sorry?
You know what it's doing here right now, right?
Well, it's running interval 3 now.
Yeah.
So you have 4 intervals.
It's going to take a couple of minutes before I then go back to that great strategy that we created last time, which I really liked. And we talked about it in the team, actually. Interesting. So it's only 30 seconds left. So those were the normal optimized parameters. As you can see, 10 was the best in APR, and 50 was second. And we now get a result for the walk forward optimization. Because right now you would use 10 probably, and it's the same. It was the best number in all the periods, as you know, not true. In the third interval, from 93 until 2013, the 70 was the best value, as you can see here. So this is actually quite interesting, because now I can see here's the heat map, which is also interesting. We optimized on this one, applied it to this one, and our profit was 4.52%. And here, or APR, and here we applied the parameters on this period, on the second period, and we got a even better profit. And all of the intervals were profitable. And you can basically see it, where is it? No, it's on the tab here. All of them were profitable. And the really great thing is I can run an out of sample with these parameters. So in this out of sample period from 2013 until 2017, WealthLab is using 70 as the period to use. So that's really a great feature. If I run it now, you can see I go to the backtest result, and you'll see this is a real out of sample testing. Result is by far not as good, but that's not untypical for a real out of sample backtesting. So you can see basically we have a 3.71 average percent return, or annual percent return, 25 trades. So I'm not a big fan of moving average, as you can see. So monthly returns, not very good. We have the returns here of the moving average, and here's the benchmark. So all in all, it's not really exciting, in my opinion. So let's go to the one that I showed you last time, which I really, really liked. I'm not saving this one, which was a what was it? Rotation strategy. I really like that strategy, rotation. So I go new on that rotation sign, and I actually took a rate of change, and I took, I think, 5, and I used 23 years. I used 23 years because I want to get that bad day, I want to get the up move, and I also want to get the 2 day, the 2 years where the NASDAQ really went down. So, and I want to use monthly for a change. So that'll be really interesting if you look at this. I changed the benchmark because I can use anything as a benchmark. So I use QQQ as a benchmark. We have the NASDAQ 100. We use the most recent 23 years. We do a rotation strategy. We buy open next bar, 33%. And we use the rate of change, which is basically the percent of the past 5 months. And interesting, what I will do, usually I would take the lowest rate. I always think buy low, sell high. That is one of my credos, but actually I changed that to the highest rate and to monthly. Every month we rebalance. And what do we have? Did I miss anything? Before I run the back test, I run it. And this becomes a really interesting strategy. Look at this. Amazing. I find it amazing. I can, let's go to the metrics. I started with 100,000 23 years ago. I am at 5 million. I beat the benchmark, which is also the Qs. I have a very high drawdown, which is 82%, but just as much as the benchmark. And actually the highest drawdown was actually, or the dollar drawdown was in 2022, which is not surprising because we went up so much. And we have the drawdown date. I mean, this is pretty much the same in percentage.
That was the highest dollar drawdown. The highest percentage drawdown was in 2002.
So it's really interesting. We have 194 unprofitable trades and 220 profitable trades, and it's really interesting to see that we have double the APR than the benchmark, and that was a figure I just picked out. You see the equity curve. Down here is the benchmark, the Qs, and it's actually a little bit better to see if I use a log scale. Now you can see in 99 it went all the way up and then all the way down and then all the way up again. So this is the benchmark and this is the strategy. Monthly system, you buy every month and you buy the highest rate of change value, not the lowest. What if I buy the lowest? Simple. You don't have to go and program it anymore. You just click here. What if I buy the lowest? I click this again. I go to backtest. Look at this. Terrible. Lowest. You're basically bankrupt here. And since then, you didn't go anywhere. It's just basically, it went up a little bit and then it's flat. So on the monthly data, it seems like there is, it's better to buy the strong ones. You have questions for that? Everyone is quiet. Robson, you've seen it before, right?
As I'm quiet because I saw before, then I can, for example, it's not a big question that I let the guy ask him.
Did you look at it?
You can check if they can understand better.
Did you look at it closely, more closely?
Yes, I look at it. Very interesting future. For example, I would like to know the difference between the MetaStrategy and the rotation strategy. I could not see MetaStrategy yet, and if you could explain after. But rotating strategy is like, for example, you can call portfolio optimization because you are invested. For example, I think that you put three. Sorry. You choose the three tops one. Yes.
Yeah. Okay. I said number of symbols to hold was 3.
3. Okay.
And you see it here. I took 33%, and I used the.
You are invested and optimize your portfolio, and then monthly.
You could use other numbers, and here you can see basically what you have to sell and what you have to buy, which obviously because the market is still changing and it's not the end of the month, is changing a little bit. And the backtest results here. I mean, let's go back to the good one. This looks terrible. Interesting enough, if you take the highest value and run the backtest, then you get this really great result. It's only roughly double what the buy and hold is, but it is so much better. And I mean, instead of making 500%, you basically make, I don't know what number that is, out of 100,000, which was the starting capital, 100,000, you would end up being at 3.9 million.
Very nice book.
You know, and we talked about it in the team, and everyone was saying, "Oh no, too much drawdown." Everyone was saying too much drawdown. The drawdown is terrible. 80%. And I was telling everyone, well, you start trading it when it is in a drawdown. That's what I think. And don't trade, of course, all your money with it.
Volker, what's interesting, and I test a lot of tools. And for example, in WebLab, you can trade, and you can, for example, have a portfolio optimization. And a lot of tools, you cannot do that. For example, I've been using Frag Trade, that's an open source in Python framework. And it's very hard to make this kind of thing there. You need to change the code. That is hard to do. Great, man. I'm very happy with Vlad, man.
Thank you. Yeah, it is because if you look at the signals and if you look at the positions, basically. And I always put the open positions on top. I like that. But you can see the rules are applied to 100 symbols. In fact, they are applied to 307 symbols. That is something that I totally forgot about it. Because, this is non-survivorship data. We created non-survivorship data with WealthLab. And this is really very, very important. In fact, I should probably show you what happens if you use the NASDAQ 100 from Yahoo. Not saying it's bad, but the NASDAQ 100 from Yahoo is basically, no, that's not Yahoo. It's basically the symbols that are in the NASDAQ right now. So if you backtest with the NASDAQ 100, that's when you get really great results. I mean, you get amazing results, but let me find them. But if you really want to backtest on here we are, on symbols that use non-survivorship data, that's what you have to do basically. See, on the NASDAQ 100 now, you see here down here, only 102 symbols loaded. Don't know why it's 102, but look at the result. You end up to not to 4 million, you end up, what is that number? 961 million. This is the number, 961.
So Volker, let's explain the difference here in these two portfolios that you tested. This one right here is a static list of symbols of the NASDAQ 100 as they are today. But you're applying that to a back test of over 20 years. So, of course, 20 years ago, there were different symbols in the NASDAQ 100 index. So the results we're seeing are artificially inflated. So this is called survivorship bias. Whereas the first test that you did was using our wealth data NASDAQ 100 that's built into WealthLab, which intelligently uses only the symbols that were in the index as of their historical dates. So you get a very true picture of testing that index using that data set.
See, and this is what I showed even last time. This NTES, you would have never bought this stock in May 2002 and sold it in November 2003, which is now in the index, but it wasn't in the index at that time. This stock alone made 4,300% profit, which actually then is a huge number, obviously. And it probably accounts for most of the profits at that period.
So let's double click on that and see the trade.
Yeah, it's down here. And you see, that's another beautiful feature actually that I forgot to, I double click on it and it opens up where the trade has occurred. You see it here above and it's there. This is where the trade was.
Yeah, but the problem is in 2002, NetEase was not in the NASDAQ 100. So in reality, you could have never got that trade. That's why using our wealth data built-in data sets that you see in the wealth data folder, Volker, if you click on the data sets on the left there.
Yeah. No, here.
And scroll up, and this wealth data folder, all of these data sets are intelligently dynamic. So when you backtest using those, you'll get results that are free of survivorship bias.
You see all these symbols, some of them changed, some of them have gone. A lot of, let's take a look at this NTS. Here it is. It's in the index now, but it was not then. So it's actually, let's run it again on that wealth data NASDAQ 100. This makes a huge, huge difference. So we run it again. It's 370 symbols that it's testing on. And now let's see the symbol with the highest profit. It's not NTES, it's Tesla. So that's,
let's look at that trade.
Here it's this one. You can see here where the line is. It's this trade with 242% profit.
And interesting, it got right back in after 1 month of being out.
Yeah, well, yeah, it actually got in right after because it actually made another spike and then it got in again and made another 61% profit. And
Then it lost quite a bit there.
Yeah. So, I mean, this is the interesting thing. You can actually analyze your trades here. You can analyze your trades here. You can see your open positions. There's a lot of things you can basically do. Here's a dollar tree, which you would have bought here, which is up 23% apparently on that last trade, 21%, sorry. And this is really what Wealth makes so strong. Monthly returns. Here we are. You're down 16% this year. Maybe a good time to get in. You know. And on this one, we actually did do some optimization. I know, Robson, you were talking about MetaStrategies, right? Did I hear that?
Yes, okay. But man, if you can, only if you want to explain them, but for example, I don't know if you plan to explain now. But.
Yeah, well, it's pretty much the same. It's the MetaStrategy is another not complex, but it's different systems with different money management systems put together, money management settings put together into one strategy. Another great tool, which is a whole full topic, and we should maybe have a webinar with about MetaStrategies, Dion. Because we want to do it more.
I mean, we could quickly show one if you want. Do you have, Volker? Do you have like 2 strategies that are ready to be dropped in?
Well, I have this one. Did I save it? It is saved. So we can use this one, and I think I have the 3x2 here.
And you can use a rotative strategy with MetaStrategy.
You can.
Sorry?
Oh, nice, man.
Okay, let's open up a MetaStrategy. We can drop in a couple sample strategies just to show how it works.
Okay, not something I used before, but I can move around. Where is it? MetaStrategy.
There's a new strategy button there right under where you are. So you see where it says new strategy?
Yeah. MetaStrategy, got it. So
okay, so what you first want to do is drag. Why don't you drag maybe the ultimate oscillator rotation?
I don't think I have it. I think
it was there. Just scroll down. Right there, Alt Os rotation. And then maybe the RSI 2, that could be another one to drag in. So we now have 2 strategies in this MetaStrategy, and each one has a portfolio weight, which is determining how much of the portfolio it'll get allocated. So you can manipulate that weight, Volker, if you want to see how that changes the allocation.
Yeah, I did already. So we give the ultimate oscillator rotation a higher weight, like this.
Yep.
Can you see that?
Now, all you need to do is go to your main strategy settings tab and set up your starting capital.
Yeah, it's
whatever you like, and your range of data. That's good, 20 years. And just let's go back to the MetaStrategy tab and then click Run Backtest. And you'll see what it does is each component will load the data, and then it will run, and you'll see your combined result.
Down here, you get all this important information. Basically, it's still running. So,
okay, so it's complete. So you can now go to your backtest result, look at your equity curve. So there's the combined result of 2 strategies. We do have one. We should have. Let's see. Normally there would be another tab here, but you might have that disabled in your backtest preferences.
Yeah, that could be.
So let's check your preferences, backtest, profit curves, MetaStrategy. So if that had been enabled, then
I can run it again. It should be there, right?
You probably would have to reopen it for that tab to appear, but let's see.
Okay. Still running it. But I mean, it's another, I mean, I don't know what these strategies we're doing right now, but the results look actually quite interesting.
Yeah, I mean, we actually beat the benchmark. So yeah, maybe can you quickly close it out and create it again?
Yep, no problem. I can actually save it.
Yeah, you could save it.
I'm going to save it, yes, and I call it MetaStrategy 1. And I put it in my folder. And I say OK. And I close it now. Is that the one? Yep. So I close it. And I open it. So where are we? MetaStrategy 1.
So this time, if you run it, we should see that other visualizer, which is the profit curves. It shows you how each of the strategies contributed to the overall profit.
And actually, another cool feature is saving workspaces. So once you have a strategy or several strategies in a window, you can save it as a workspace. Every time you open it, it actually opens all your settings and everything at once, which is another feature that we should at one point highlight. Backtest results, here we are.
So now you can see your profit curves.
Yeah, you can see your profit curves here on the right.
So this is showing you how each of the two strategies contributed to the result.
Interesting, huh? So, I mean, in the period here where the green one was, I mean, I would probably trade the green one only. But what data did we actually use? Did we use...
Look at your MetaStrategy settings. Each one used a different data source.
Yeah, each one used a different data source. So, yeah, but that's pretty interesting to see that actually the green one would be probably the preferred strategy because you pretty much end up at the same point and didn't have that many drawdowns. So.
Well, right. The red is a rotation strategy, so it's subject to those large drawdowns.
Is it right to you can compare your strategy, not apply only, but you can compare.
Yeah,
you can see which one is better.
I think I did give the did I give the oscillator? Yeah, I gave this a higher weight. So
yeah, you better knock that down a little. Yeah, and let's try it again.
And I try it again and see whether that curves is changing. All these analysis tools available, and you know, as you could see, we haven't programmed a single line so far. Whereas I think one of them is a program strategies. So now you see green and red. It actually changed a lot. And the equity curve is still above. We're still beating buy and hold by quite a number. You know, the comparison to the benchmark is something that we like to do, but also the exposure. If we are less exposed to the market and still beating it. The drawdown is a number that I always look at. Here we are. See here, 56%, 39%. Gives me a lot of confidence.
So the MetaStrategy is good once you have a few strategies that you're comfortable and you know you want to trade. You can then put them in the MetaStrategy and run them day by day or week by week if it's weekly, whatever, and then get your signals kind of all up in one place.
This is also an interesting tool, the periodic returns. It actually shows you in which months you make the best profit. Some people think it is important. In fact, we have a strategy on world signals which is called moon phaser, and the moon phaser is actually oops, I forgot.
Oh, sorry, man, my dog.
Yeah, no problem. We have a strategy on world signals that's called moon phaser, and it actually buys on full moon and sells on new moon, or the other way around. You will be amazed how good the system is working. So, but this one is the monthly return by month, grouped by months, and you know, you can group it by week and by daily. So Tuesday is the best, highest profit, as you can see. So these are all interesting numbers, and it's actually pretty profitable. And what kind of positions do we have? Open positions on top. We have 3 open positions, and we have 4 signals. All this really nicely. Obviously, you can then place these orders in one shot. You can basically go here and say place orders, and then you have to connect to a broker.
Oh, so you're placing them through Alpaca.
Yeah, it's a demo account on Alpaca.
Yeah, we should show that too, actually, because this Alpaca extension is a great way to test out your trading before you decide to spend real money. You create a paper trading account on Alpaca, and then Wealth Lab can connect to it, as Volker has done right here, and you can really simulate the whole trading strategy experience without risking any money. So it's quite a nice way to test out your ideas.
Here's also an interesting error message. It says 1 or more errors occurred, and then it says insufficient buying power.
Yep.
The buying,
so you didn't have enough simulated money for all of those positions.
Exactly. It's not enough money. And that's another feature where you can actually go in back to the strategies and then prioritize your positions by using where are we? By using the, let's see here, by using the transaction weight. You can basically say if you have 5 orders for the next bar, whatever that period is, but you only have money for 3 orders or for 3 positions, you can basically then drag it into your strategy and test. We've done that, I think last time we said, only buy those that have the lowest RSI or are above the moving average or below the moving average or, you know, whatever. And basically with this transaction rate, let me quickly add this to one of these strategies here that I have. You can basically say, that's my 3x2. Nope, do I have to create it? New building block. I'm sure I have it somewhere. Strategy 3. No, not there. But you know, if I have a strategy that says, okay, go here, indicator compare to value, go here. But if I have the same number of trades, then I can go transaction rate and say only take those trades with where the RSI has.
Let's show the difference. So let's remove the weight first of all.
Okay, let's remove the weight, and I do.
And let's add a sell condition, like you know, sell after 5 bars or whatever, something like that.
Okay. Let's say consecutive down is 3 days, and then we say sell after. Where do we have this? 5 bars. After n bars. That's when we want to sell. Here we go.
So now run that on like the NASDAQ 100.
Yep.
Maybe with 20% of equity.
Yep.
And then let's click run back test.
Is that actually, you guys all know what we talk about, or do you need more explanation? I mean, this is, if I would look at it, I would think, wow, this is fast. This is the NASDAQ 100. All the symbols in the NASDAQ 100, survivorship bias considered. 20% of equity every time you get a signal, 20% benchmark QQQ. So I'm running it now on, so if the stock closes 3 days in a row, 3, then I buy and I sell after 5 days. Run the back test. So period only use 20 years. And here we are.
So let's, Volker, can you scroll down the metrics report and see if we have any NSF positions?
Tons of NSFs. Here we are. We have 4,172 trades, but we have 21,000 NSFs. That means not sufficient fund.
So that means, so that means just like when Volker was submitting his orders to Alpaca, one of them came back not insufficient buying power. So this strategy, he had a position size that was too high to take all of the trades. So let's look at the profit now. It's 737%. Let's run it again. So now the profit's 386%. What happened? So there's so many trades that couldn't be taken. Wealth Lab will randomly determine which one of those candidates to take, unless you control which trades will be taken by using this thing that he was showing, which is called transaction weight. So by this building block, you can say, I want to prioritize the candidates by a certain indicator.
Something that a lot of programs do not consider. They just take either some random numbers, or they take the best ones because a computer can look ahead. They don't consider that you actually have to have more position or more signals than you have money. So the transaction rate, if I pull this over and say only take those with the lowest RSI, and I change the parameter to 5, and I could optimize that obviously, but then I would always use walk forward optimization. So here now if it's 3 days down, and if you have money for, let's say, 3 positions, it takes the 3 with the lowest RSI value.
Okay, let's run it.
Yeah, let's run it. Okay,
and I would imagine we'll get an even different profit value.
And so we get a much better result.
We got 1,261% this time. But let's run it again and see if it changes or if it's stable.
Yeah, here it is. 1 second. We have a profit of, what was it? Let's run it again. Equity curve, run back test. $1.2 million, roughly. And it's the same number again, 1.2 million. So the transaction rate is sort of a filter that says, if I have more signals than money, which positions shall I take? And we have 31 signals here now, but it will take only the ones with a lowest transaction rate, right?
Lowest RSI.
Lowest RSI, yeah. So those will be taken then from those 31 signals that we have. And as you can see, the equity curve is always the same. I mean, there could always be some little difference, but it shouldn't be. Oh, and now we have a error. Continue. So you see that. you guys have questions, because we have this 1 hour limit, and last time we were doing quite a long time, but this time we want to basically limit it to 1 hour. And I see a lot of new faces, like, well.
Yeah, hi Volker, this is Nate. Can you hear me?
Yep, I can hear you.
So could you show like your building block strategy to the strategy monitor, and like so it actively trades via the dummy account or the API for TD or Alpaca in this case?
Okay, so to the strategy monitor?
Yeah, like you showed us like how to develop the strategy, the results of the strategy, but to get the Wealth Lab to manage the trade as algo trading, I guess that's what I'm looking for.
Yeah. Okay, Leon, you gotta help me a little bit here. As we've got all these signals here.
Oh yeah. Well, you could even just do a really basic standard strategy. Like the 50 crossing the 200. Like, it's not about the strategy; it's about Wealth Lab managing.
We've got a strategy here. So,
well, yeah. I mean, what we're doing now are daily strategies. So typically, I mean, at least for daily, what you could do and what I do is just run these signals and then select them and place them like Volker did with Alpaca. I mean, if you want to do something intraday, like a 1 minute or 5 minute strategy that will automatically generate signals, then there's a couple ways of doing it. You could use our strategy monitor. So you would open that up and then you could drag a strategy into there and then configure it to run every 5 minutes or whatever interval you want, and then also configure it to automatically stage and or place the generated signals. So that's one option. Another option is you could run a strategy in a streaming chart, which could then also be configured to automatically place the trades. So Volker, if you want to maybe drag the RSI into that strategy monitor.
Yeah,
you have your name filter there. So you have 3 typed into your name filter. So you probably want to erase that text in there. Go down a little. Go down, right there.
Okay.
So now if you maybe drag over the RSI 3 or the RSI 2, sorry.
Yeah, was the RSI 2? Where was it? Was it in
Well, if you type RSI in the name filter, then it'll show up.
Oh yeah. This one?
No, let's do the other RSI 2. Yeah, that one, the one we were doing before. Yeah. So now if you drag this into the strategy monitor, you can then configure, first of all, the scale. So it's set up for 5 minutes. So that's good. Let's leave it at 5 minutes. Then you can select your data set that you want to apply it to.
Yeah.
So for this purpose, why don't we select a data set that has a little bit fewer symbols, because it needs to initially populate all that data, which can take a while, especially with 100 symbols.
So I took Dow 30.
Okay. And then you select how you want the updates to occur, either streaming, polling, or streaming bar. So then next you'll need to, if you do select streaming, you'll need to select a streaming provider. So we have that's your broker. So this is where the signals will eventually get placed. So your streaming provider, we have these various options. I mean, for now, just let's say select Yahoo Finance. That's a built-in kind of free provider that we have that comes installed with Wealth Lab. The best streaming provider we have is IQ Feed, but it doesn't look like you have that extension enabled. So this is how you would configure the strategy. You could then click OK. So it would then appear here. So now if you select that strategy in the list, you could then press one of those auto stage or auto place buttons, which would then tell WealthLab whenever this strategy generates signals, I want to automatically either stage them to the order manager or directly place them with in this case, Alpaca. So that's how you would set up a strategy for intraday kind of algo trading.
So you would have it activated with auto place. So for instance, like I'm not in front of my computer, but I want it to manage the trades. So I just set that up with activate auto place, and then I take off for the day and it does its thing.
Right.
Okay.
So you would then press auto place, and do you have to run something?
You'd have to activate it, yeah.
Should I do it?
Yeah, you can do it. I think you're using Alpaca as your historical data provider, so you may run into some issues. They have some limitations for their historical data. So, I mean, for this kind of trading, we really recommend IQ Feed is the best source of intraday historical and streaming data. But yeah, you can activate it. Let's see what happens.
Yeah.
So it's first. Okay, so it basically returned an error right away. It looks like maybe you don't have any intraday historical providers enabled in your data manager.
Yeah, no, I don't have to. I don't have actually.
Okay.
Didn't activate.
Why don't you, let's go to the data manager quickly. And let's look at your historical providers. So yeah, you would need to enable at least one provider that supplies intraday data. So Alpaca, is a possibility. So you can check that one and then close out here. And if you reactivate, then it should then get the data from Alpaca. Let's give that a try. So it's now populating the data from Alpaca. So it looks like it did get the data. It's now getting the partial bars. And it's scheduled.
Oh, did I close something? No? Oh, we got a signal.
So yeah, so it looks like it actually did run for the first interval.
So we did get a signal here for Visa, I guess. And it says we shall buy. Should I click it? If I double click, does the chart open or what happens here?
No, I think it lets you edit the symbol if you double click. So you could see the status. It's still trying to process one symbol, which it wasn't able to. So could be some issue with the Alpaca not returning the data for that symbol, but it wasn't able to process United Healthcare. So, however, it did process 29 of the 30, and it's scheduled the next run for 1910, which is 1:10 p.m. Eastern time. So it was successful. So that was good. And it will now run again at 1:10 p.m. So every 5 minutes it will try to get the updated data and run and submit your signals automatically.
Awesome. And this is also, like you mentioned earlier, doing the daily bars. So if I have a set, I could do it as a stage order, and it'll just automatically tell me when the parameters have been hit in the strategy monitor.
You could. I mean, in my view, the strategy monitor is best suited for intraday. I mean, for me, it's just as easy to kind of run the strategy in the strategy window if it's daily, and then I just get the signals there. I mean, you could put a strategy in the strategy monitor and set it up for daily. That'll still work fine as well.
Great. Thank you for showing that.
Yep, no problem.
If you have suggestions or ideas, or you're always welcome. We have actually a feature request list on our website where people can request certain features that they like to see, improvements or new features, and then people can vote for it. And if you get the most votes and you find yourself on top, then you have a very high chance that it'll be developed.
And yeah, and we have kind of gone over 1 hour already. Are there any other quick questions that we can get to before we wrap it up?
Can you have more than one strategy in the monitor?
Yeah, you can drop in as many as you want.
Okay, nice.
Yeah. So it'll run automatically and produce the signals. And I think I did not press out of place, right? And that's why it's not with the package.
One other question to this, because I've been struggling and playing around with this a little bit, is that when you close Wealth Lab 7 and then reopen it, the strategy monitor doesn't come back up, is what I noticed.
Right.
But then if you save it as a workspace, then it does. Can you
the idea is you would have everything set up the way you want and then save this as a workspace. Then when you open the workspace, it will load up all of those strategies that were part of the workspace.
Yeah, it's all in the workspaces here.
And Volker, why are your menus like kind of hanging to the left instead of the right? I noticed that happens to Robert too.
Which menus?
Well, whenever you click a menu, you see how it hangs to the left. Normally they'll hang to the right.
I have no idea. It might be because I'm using Windows 11 and I have the option to actually the icons at the bottom. I said they should go to the left. Maybe this is influencing even the icons here in Wealth Lab. I have no idea. Never thought about it, to be honest.
Yeah.
But now that you mention it, I mean, I can still see them. They're not going out of the screen, but yeah, never thought about it. Interesting. Maybe it's because of Windows 11. I don't know whether Robert uses Windows 11.
I have another question in regards to rotation strategy. It has the margin factor set at 1.2, but it doesn't look like it's changeable. Is there any way to change that to just 1 or not?
No, we made that kind of a default to 1.2 because with the rotation strategy, it's always trying to buy and sell, so that you're fully exposed. And if there is no margin factor, then what can happen is if it places the buy order for a buy, and then if that price of that symbol kind of gaps up a little bit, then it's not going to have enough money to buy that symbol, so people will miss those trades, and then they'll be asking, why did the rotation strategy not take this trade? So that's why we gave it that kind of a little bit of wiggle room to get all of those trades.
Okay, it makes sense now. I just had a question about it.
Yeah, sure.
Well, yeah, it was quite interesting because we went a little bit off road, but it's interesting to get these questions. And I think we probably have something like, hey people, what do you guys want to see? What do you want to know up front, so that we can prepare for that. I mean, we've had some interesting questions about MetaStrategy.
Yeah, that's a good idea, Volker. We should post something on the forum for the next one, asking people to, kind of respond with what they might like to see in the next one.
Yeah, and that way we can prepare it and have it ready. I'm not an intraday trader, so I don't have intraday data. I think end of day is pretty good.
You do now.
Yeah, well, you see me using it now, and I will probably never use it again unless someone is asking. I mean, I made my experience with intraday data. So if you trade with intraday data, I think you need to have a good data provider, a good internet connection. There's a lot of things that you have to have. So that's why I think, end of day data, even on end of day data, it's getting complicated. And with Wells data, I get some confidence. Yahoo data, you've seen the difference in that rate of change strategy, which I didn't do the walk forward optimization, I think. Anyway, so yeah, if there's no other questions, we close it. And on the next, maybe on the next webinar, we ask people what they want to know or what they want to see, and then we can prepare for that. Does that sound good?
Sounds good.
Okay, guys, thanks for joining. And I think, no, we didn't record it because then I couldn't change, do screen sharing.
I recorded it.
Ah, excellent. Cut my mistakes out. Okay, so have a great evening. Play around with it. There's a lot of user errors you can make, and but eventually you'll find out. And even, I think programming is already hard with drag and drop, and you need to be a real genius to do other stuff. That's why I'm very grateful to Dion that he developed the drag and drop and everything else which is in there. So it's really good because Dion is the main, well, he is the developer and who did everything that you see here that I showed you. Was created by Dion.
Well,
and
I do have some support. It's not just me, but yeah, thanks,
Yeah.
Volker.
Well, and even he sometimes doesn't know where things are. So anyway, good. Thanks a lot. And I hope to see you next week. And as I said, we plan to have more of these calls and webinars. And I think it's helpful to see it sometimes in action. Okay.
Great.
Thank
All
you.
right, take care, everyone. Bye.
Have a great day.
Bye.
Thanks. Bye.